So with SoFi and the market running red hot, that also means speculation is running wild and red hot too. And now people are saying buying SoFi today could set you up for life. So let's separate the truth from the hype with this, because it is possible if you do certain things and you avoid others that everybody seems to fall into. So just make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get today, guys. That's what we cut through on this channel. And hey, guess what? It's back again in regards to SoFi, but in a very, very different form than it was prior to that. And that's okay. It's a great discussion for us to have here as shareholders or potential shareholders, because we're at a point right now where the stock is running red hot, right? You know, we're approaching $30 per share here shortly. This isn't like just a couple of years ago where we were buying shares in the fours. Even just earlier this year, you were buying it in the nines, which you would have seen all those buys in real time if you're part of the group. I mean, I may have left something special down there in pinned comment for those of you guys that want to be a part of that. But nonetheless, we're probably not going to see that $4 range again if I had to guess, right? But yet, we all know SoFi is a great company. And unfortunately, stuff like this starts to kick up and it creates a lot of confusion. So for me, I ran across a Motley Fool article, which we've covered them in the past. So I don't want to run down that rabbit hole again today in regards to them specifically. But it did get me thinking about this question, because the article was titled, "Hey, buying SoFi today will set you up for life." Now, when I got into the article and I actually read it, the article was useless. There was no point in reading it. It just basically gave you the highlights from the past earnings call. And it kind of ended with, we don't know or really think SoFi could be there, but our top 10 list. And then obviously there was a promotion from there for the top 10 list. Again, not going to run down the rabbit hole or anything else of that nature. But the way that it kind of came across, I know it got me thinking. I know a lot of you guys out there thinking, is SoFi that type stock or not? And more importantly, is there a way that a stock can set you up for life in general? So we have to weigh out everything, both good and bad. And so let's kind of start with the bad first and how SoFi kind of fits into each of those. And then I'll tell you exactly the way that SoFi might very well be that type stock for you, at least give it the best chance for it to be that style stock for you. But simply trying to find a stock that will set you up for life is very misleading. And I know there's tons of articles and videos and everything else about it, but it's just kind of misleading. And I hate it for the following reasons. And the first one is it encourages lottery investing. Now, just to kind of be clear here, it is stupid in my opinion to go all in on one stock, right? It was all the rage back in 2021. It's just silly. It's also silly to think that you can put $1,000 into one stock and it will make you a millionaire one day. I'm not saying it's impossible, but it's an incredibly poor investing strategy. Every stock market millionaire that I know, and I know a lot of them, consistently put money into the market for years and then decades. Now, yes, to be fair and upfront, I've had a stock that were just a few $1,000s turned into millions of dollars. But that is abnormal and impossible to guess which stock will do that. And that's over the course of 20 years, more importantly. Impossible to guess. It's just one of those things that just simply happened. Now, does SoFi have the ingredients at this stage, from what we can all tell, to do that, even if I'm wanting to just, kind of best case scenario it out there for SoFi? And my honest answer is no. That doesn't mean I think SoFi is bad or anything else. So slow down before you go bash me. Hear me all the way out here. Typically, stocks that turn $1,000 into $1 million later on are tech stocks that come in and completely change the world. Like Apple, for example, for myself, where they just introduced something nobody had ever seen before. It's game-changing, changed how we use and operate with technology and everything else. That right there is what I'm talking about. That's typically where you see that style of deal. Now, that doesn't mean that I think SoFi cannot be a great investment. It can, and I believe that they will. But if I get a 10x over the next, 5, 10 years, or let's just say 10 years, I'm extremely happy. But just a 10x is pure speculation that we will see that. But a 100,000x, I don't think is in the cards regardless. Now, of course, I am very happy to be wrong, because I will make a lot of money, because I have a lot more than $1,000 into SoFi. But if I'm being honest, it's just not that type company to begin with. And that doesn't mean it's not a great investment or a company you shouldn't own. It just means it doesn't have that type of potential out there. And again, trying to guess that anyways is complete fool's gold. And lottery investing, basically, I'm going to throw $1,000 at it. It's going to turn to $1 million one day. Yeah, you're better off playing the lottery and trying to guess that sort of stuff. So number two, has you thinking about projections instead of fundamentals. It is very common, and honestly, it's very easy to fall into the trap of getting into projections, right? Because there's something like, hey, you need to project out your stocks. You need to make sure that you're buying at a good valuation, all that sort of stuff. Sure, when I say that on this channel here, I mean projecting out a year or two. But in order to project out this, hey, buy a little bit and it's going to be life-changing later on, you have to project out well into the future, which is totally useless. It's a total guess. There is no way to project out 10 years into the future. There's no way to project out 5 years into the future, much less any of those other crazy timelines you need to get in order for this to be a quote unquote life-changing stock. Or it needs to put up some crazy EPS numbers, some crazy growth rates that it's shown no ability to put up whatsoever to this point in the journey. You kind of see what I'm saying there. You just kind of end up doing a lot of projections and a lot of speculating instead of getting back to those fundamentals. And a lot of times what happens is people will ignore the fundamentals, what's going on right now, for projections to justify buying at a higher price because they're feeling that FOMO. They watch a video, this guy's saying this, they watch a, X post, this guy's saying that. And, before you know it, you're a month down the rabbit hole of social media stuff and noise and everything else. Remember, noise can be positive and negative, but before you know it, you are not even in the world of fundamentals and you're strictly basing all your decisions based upon projections and not reasonable projections over the course of a year or two based upon what management said, based upon a lot of hype, a lot of speculation, 5, 10 years into the future, 20 years into the future, whatever the case, 2040s become all the rage lately to project out to there. That right there is where you start getting away from those fundamentals. And that's where you get in trouble as an investor is you start straying into projections instead of fundamentals. That's how you end up severely overpaying for a price and then end up in a situation where you could have bought a lot cheaper, but instead you ended up taking a 50% haircut because you were basing all your numbers based upon these projections that weren't anywhere in the realm of possibility. They were simply speculation. And number 3, it neglects goal setting and planning. When you get into this mode of trying to find this life-changing stock or the stock that's going to change your life or whatever the case is out there, you end up forgetting what your actual goals are. What do you need? Do you need $1 million in retirement? Do you need $5 million in retirement? You can retire in as little as $300,000 in retirement. I know somebody that's retired on $100,000, if you can believe that. Now, I could never live her lifestyle, but nonetheless, she's doing it and loving life. So it comes back to, you got to set goals in the first place, and most people don't have stock market goals. And then, of course, if you don't have goals, how the heck are you supposed to create a plan to it? That's the secondary piece. And then how does SoFi fit in with the 5, 10, 15 other stocks that you want to own? How does it create that risk profile that you need for your individual investing to where you can sleep at night and live with the volatility that will come with a stock like SoFi and maybe some of the other stocks that you have? When you start to think that way, people neglect their actual goals, what they need. Of course, then you're not planning as well, which of course comes in with valuation and a lot of other things of that nature, all make up that entire picture of what you're doing. And it makes it very, very easy to know what to do when the market has a chaotic time. I knew to buy SoFi in the 4s, rinse, repeat, because I was paying attention to the earnings calls. I had a plan and I simply executed to that plan. I knew what my goals were in terms of how many shares I wanted. And then of course, as management continued to impress me, I wanted more and more shares, meaning I adjusted my goal for what I wanted for that stock. If you're just constantly chasing the next life-changing stock to buy so that way it can, solve all my money woes or whatever the case is, you're going to neglect goal setting and planning and being strategic about what you're doing in general in regards to your investing, which of course leads to mistakes. It leads to emotions, more importantly, which we all know is the worst way to invest, right? Even the idea of SoFi, being a life-changing stock and set you up for life, that idea just in your head will immediately create an emotion, right? And then all of a sudden you get greedy, you get FOMO, you get a lot of other things, especially as people start projecting and doing some of the other things we talked about. And now that sets you up for mistakes because you're not investing anymore based upon the numbers, based upon your plan, based upon your fundamentals and the strategy and everything else. You're simply investing based upon emotion, which is a losing strategy over the long run. But how do you ensure SoFi gives you the best chance to set you up for life? How do you ensure SoFi has the best chance to do that for you? Let's talk about that next. There's 3 things that you got to do in order to ensure that SoFi has that chance to be that stock for you. If you don't do these, it has no chance to be that stock for you, regardless of whether you love the stock or not, regardless of whether it actually does it or not. Let's say that it does. If you don't do these 3 things, you're not going to get to enjoy that life-changing money. Number 1, do your due diligence every quarter. Of course, you got to do your due diligence up front, but it doesn't just stop there. You have to do it every single quarter. If SoFi is going to be that life-changing stock for you that sets you up for life, if it's going to do that, it's going to be a long journey. Of course, we all hope it happens faster if it happens at all. Nonetheless, it's not going to happen in 1 or 2 years. It's going to happen in 10 years, 20 years down the line or something. Again, that's all speculation. I have no idea when it's going to happen. But if it's going to happen, it's going to be well into the future But in the meantime, in order to know what's going on, in order to know, is it turning south? Are things getting better? Whatever the case is, you have to do your due diligence every single quarter when that earnings report comes out. Listen to that earnings call, assess the stock, assess valuation, assess all those sort of things, bounce it off your strategy, bounce it off your plan and what you need. So that way you know exactly what is going on with your stock. I don't care about the news. I don't care about social media posts or anything else of that nature. I'm talking about solid due diligence based upon the fundamentals that are given to you every single quarter by that management team. You have to do that quarterly over the entire journey. You don't get to just go, oh, well, I bought it and let me just kick back and relax and not pay attention anymore. I wish it worked that way. It's just kind of not how it works, right? It's kind of like you want to work out and get six-pack abs. Hey, you finally get your six-pack abs. You can't just go, oh, well, I'm going to eat and drink whatever I want now and they'll just stay. It's not how it works. You're going to lose touch with those fundamentals. You're not going to understand what's going on with the stock. You're not going to be able to spot either opportunity or obviously a problem as well, fundamental problem. Number two, you don't take profits or trim. Statistically, guys, the studies are done by Wall Street. This is not Luke's studies. This is not Luke's opinion. The studies have been done by Wall Street. Yes, we had Trips, our great coach there in our group, go back and back test it as well. All the math tells you people that take profits or trim underperform those that just simply buy and hold. That statistically holds true no matter what happens in the market, no matter what time frame you want to use, that holds true. Therefore, as SoFi rises on its journey, right? Let's just say it's going to, let's just say it goes to $100 per share, $500 per share, whatever the number you would need in the future to get there to make it life-changing for you, okay? Over the course of that journey, if you're consistently taking profits or trimming at that stage, you're going to own less shares when you get there in the future. Therefore, it's going to take you longer to get there. And if you think you're going to trade your way, oh, I'm going to sell here, but then I'm going to buy back here and all that, you're using that hindsight trading junk. If it was that easy, we would have trillionaire investors, but yet they don't exist. They're not around. They can't, they just don't, right? Hedge funds underperform dead people. How is that possible, right? They got supercomputers. They got access to inside information. They have tons and tons and tons of Ivy League MBAs running around those places. You can't move around one of those offices without hitting 5 of them. That's how smart, how intelligent, and how much brain power is going into all that sort of stuff, but yet they can't outperform a simple buy and hold and out on the dip strategy. They can't do it. I know taking profits, maybe you win in the short term. Nobody's ever lost money taking a profit. I would agree that. However, lots of people have missed out on millions of dollars in gains in the future and hundreds of thousands of % of gains in the future by taking profits or trimming. I've made that mistake too. A $600 profit cost me 7 figures over the course of 20 years. That's how much taking profits did. Now, I'm foolish to think I would have taken that $600 and somehow turned it into that same $1 million 20-something years later. It wouldn't happen. That's impossible. Nobody has that sort of track record as a trader. All I had to do was simply hold those shares to get that money. So that is the second point, which leads me perfectly into the third point, which is you have to understand share count is what matters. Share count is what matters in the end. That's why a simple DCA is so hard to beat, because you simply, would you rather own 1,000 shares at $4 or would you much rather own 10,000 shares at $8, for example, right here with SoFi, right? I would much rather own the 10,000 shares because it's going to be worth $1 million a heck of a lot faster than the $1,000 shares were, right? That's just basic math. But a lot of folks don't understand, just simply stack shares. A great company that performs and becomes life-changing over time. Now, again, we don't know if SoFi will or not, but if I want to give it the best chance to turn into that for me, I need to be adding shares either on a DCA or I use a modified DCA where I'm buying on those dips and I'm just simply stacking shares. The more shares I have, the more money I will make, because a great company and a great management team will compound my money over time, over the course of decades. I'm so glad I added Apple, after the financial crisis, despite the fact I didn't need to. So glad I added it in 2014, 2016. Added it in 2021, if you can believe that. It was one of the only stocks I could buy that was undervalued at the time. I like the way it turned out. It's more than doubled in the meantime, right? Not bad return on a boring stock like Apple. Every single share matters over the course of the long run. When you understand that share count matters, games like trimming and taking profits and all that sort of stuff, they just don't make any sense. More importantly, this is all basic math. You don't need a ton of crazy math in order to get yourself there. It is very, very easy to understand, but I understand there's so much noise out there. There's so much confusion. There's so much, people telling you one thing, people saying another thing. That's okay. If you want to cut through all that noise, I may have left something special. For those of you guys that stuck around this long, it's the pinned comment down there where we teach you exactly how to do that. We show you the very easy math for valuation, for share count, for what does the truth on holding versus trimming and a lot of other things of that nature. You get that through 5 free courses. We have free coaching. You can jump on our live Q&As that we do weekly at least. I feel we have the best 6, 7, and 8-figure Discord out there of members helping you, successful investors helping you. We got portfolio challenges going on. I put out, 3, 4, 5 videos a week just simply in there for those members. There's so much involved. Make sure you check out the pinned comment, see if the membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.